Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. It's a bloodbath out there in the metals. You're seeing gold more than $100, not more than 120 bucks from the high we already seen this year. Think about it though. We saw a low of 1767. We've now seen a high of 1962, and it's selling off sharply. It's trying to find maybe an equilibrium somewhere between 1820 and 1860. That's what we got to look for now. Why is it selling off so sharply? Well, first, let's take a look at the jobs data. You actually had 140,000 jobs lost in December. Usually that's good for gold, right? Well, not today, because the dollar index is actually working off from oversold territory, and the other part is the treasuries. The treasury yields are continuing to rise. The 10-year treasury yield rose to a high of 112%. Now you're thinking, why? Why would the treasury yield rise on bad jobs data? Well, it's pricing in the anticipation of added stimulus. It's anticipation what they're going to be supply of treasuries to print for all that debt. So really what you're seeing here is the treasury market pricing in the anticipation of added fiscal stimulus, the dollar working off oversold levels, and then really what it's doing is it's crushing gold. It's the worst case scenario for gold, and now silver following suit. It's the worst case scenario because we don't have new fiscal measures right now. They haven't talked about a new $1 trillion stimulus plan. It's just that $900 billion plan right now, and there also seems to be a little bit of headwind for that $2,000 stimulus check. So keep an eye on all of that right now. But that's what we're seeing here. That's what's crushing the metals. And then on top of that, we're seeing the S&P and some of the stock indices start to work off a little bit of that exuberance. The Russell's the first one to give. Next support really look for in the Russell, about 2035. For the S&P, we're looking at 3788. That's our previous resistance level. Staying above there is bullish. It's kind of moving off below 3800 here as I'm talking. The previous highs is the next support, 3775. NASDAQ, though, holding very well right around that 13,000 number. But 12,900, that's a full 100% extension from the February highs to the March lows. 12,900, holding out above there is constructive and remains bullish across all timelines. Give us a call. We're here to help with anything on the board. 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.